This is the best fair value gap trading strategy that you can use right now. Now, if you have found fair value gaps to be not working for you and you are like struggling with finding good entries and you're struggling with you finding the direction and the bias and the overall proper trade, then this video is for you. I'm going to teach you an entire model based around fair value gaps, and we're going to do top-down analysis. I'm going to teach you how to do top-down analysis. And after watching this video, you will have a mechanical bread and butter trading strategy that you can use. So let's start with the video. So the very important thing that you need to know, first of all, is price only does two things. It goes from internal range liquidity to external range liquidity, or it goes from internal range liquidity to internal range liquidity. All right. So in this strategy, in this model, we're going to trade off from the internal range liquidity and we're going to target in external range liquidity. All right. So any swing high and swing low is called ERL, and any fair value gap is called internal range liquidity. So first of all, the very first and the most important part is that we have to identify the order flow on the daily time frame. So order flow on daily time frame. This is very important. We have to look at the market structure of that specific pair or assets. Are we making higher highs and higher lows, or we're making lower lows and lower highs, right? This is very important. If we are in a bullish order flow, we are only going to take long positions. And you know, there are so many books and so many sayings on YouTube that you have to trade with the trend. Trend is your friend. And just by implementing this technique of trading with the trend or order flow, your win rate can significantly increase without even doing anything, because the probabilities will be always in your favor. So we're going to use 3 time frames to frame our trade. First of all, the daily, of course, we're going to look at the order flow on the daily time frame, right? And we want to choose daily, 1 hour and 5 minute time frame. This is going to be our time frame alignment. So we have to mark out internal range liquidity, which is going to be the fair value gap, on the daily time frame. So this is step number 1. All right. Now we wait for price to come into our internal range liquidity, right, on the daily. After that happens, we have to drop down to 1 hour time frame. Now we have to look for a confirmation. We have to look for a market structure shift on the 1 hour time frame, right? So simply, we would look for a market structure shift inside that fair value gap. Now, once you get the fair value, the market structure shift, right, we have to look for a sell side liquidity sweep, right? And we want to see a higher low to be taken out, right? Notice what I'm saying, a higher low. So we have a market structure shift, higher low, and then a higher high. Once that forms on the 1 hour time frame, you draw that out and you look for a liquidity sweep, okay, on the 1 hour time frame. Now, after Asian session or after 2 a.m., you have to look for a liquidity purge of over here on the 1 hour time frame. Now, of course, if you're trading AUD and JPY pairs, you can trade this on during Asian Open as well. All right. So on the 1 hour, once price takes out this low here, you drop down to 5 minute time frame. Once the liquidity is swept, you drop down to 5 minute time frame, right? And you look for a 5 minute market structure shift. You then take your entry from the fair value gap in the discount, all right? Or auto block. You can take your entry from the auto block or break a block or a unicorn model, whatever works the best for you. And you target the most recent 1 hour swing high, which is going to be this. So this is going to be a 5 minute market maker buy model that you will be taking after framing your trade off of daily internal range liquidity. So we're going from daily to 1 hour to 5 minute to frame our trade. All right. Now, another way to take your entry is once you get the market structure shift on the 1 hour time frame, you mark out the extreme fair value gap in this leg, and then you wait for price to come into that, right? Let me just adjust this. Oops. My bad. All right. So once you get like a market structure shift on the 1 hour, you mark out the extreme probability gap on the 1 hour time frame, right? And you look for a 5-minute market structure shift, just like that. But the liquidity sweep method has a very high probability rate. It has a very good win rate. All right. So look for a higher high and higher low formation like that. So let me just do that. Perfect, like that. We take out this low, then we get a market structure on the 5-minute, and we target this high. Now, you can take 50% off here, or 70%, or 80%, and let the runners run till the higher time frame target, which is this ERL. And similarly, that would be the same case here. You mark out the daily fairly gap on the daily time frame, right? And then you wait for price to come into your daily fair value gap or internal range liquidity. Look for a market structure shift on the 1 hour time frame. Look for a lower low, lower high, lower low formation on the 1 hour time frame. And then you look for a lower high liquidity sweep, right? Over here. And then you look for a market structure shift on the 5-minute. You take your entry and you target this, and your high time frame target, like your final target, would be this. So this is the entire strategy. Let me give you guys some examples, and then everything is going to be crystal clear. All right, before moving on to the examples, I want to quickly talk about the Blue Guardian prop firm. Honestly, it is one of the best prop firms out there. I've been in the prop firm industry for way too long now, and I can tell you this is one of the best. All right, they have like 85% profit split. They have the best spreads, right? Literally the best spreads. They have one of the cheapest challenges, and they also got this rapid evaluation program. You only need to pass phase 1. And once you do it, you get the entire account to yourself. You get funded. So there's a link in the description. Click on it and use the code FAZSMC, and you will get 10% off on your next purchase. All right, guys. So here is example number 1, looking at NZD/USD on the daily. So over here, what do we have? We have internal range liquidity, and over here we have external range liquidity. So I'm going to drop down to 1 hour time frame. And I'm looking for a market structure shift, right? And just around here, we have a shift in the market structure. Now, this entire move is our auto block, so we can anticipate that price can reverse from here. So once price reaches the 1 hour auto block, right, I am marking out my most recent high, and that is going to be my 5-minute market make buy model. So over here, what you can see is after a drop to 5-minute time frame, we have a shift in the market structure, and just around here we have a fair value gap in the discount. Now I would take my long from here, put my stop right below this low, and I would target this. So if I play this through, you can see price tapped into our zone. Notice the time during kill zone. It is very important. And you're going to see that the take profit was hit after some time. Just like that, the take profit was hit. Now you could have closed some of your position here, and then you could have targeted this original consolidation, which would be your the lost target. All right, so essentially this is going to be your lost target, because that was the actual draw liquidity on the daily time frame. So that would have given you an insane amount of risk reward, but it's not going to happen every time. Let's move on to another example. All right, guys, so here is example 2. I'm looking at CAD JPY on the daily, and you can see that we have IRL marked out here, and price has gone into the IRL. This is ERL, so this is going to be our high time frame drawn liquidity. So now if I drop down to 1 hour time frame, and I zoom out a bit, you can see price tapped into the fair value gap or the IRL. And now what we're looking for is a market structure shift. So if this low breaks, that would be a market structure shift. And right here, what do we have? A shift in the structure. Now we have this lower high over here. So now I want to see this lower high to be purged during Asian or London session, or New York. And you can see that over here, just by this wick, the high was taken out. This low is going to be my 5-minute market maker sell model target. So if I go here, you can see price took out that high. And since we are trading CAD JPY, we can trade it in the Asian. And you can see that we have a shift in the market structure. We have this fair value gap. And this would be the target. And you're going to see that the take profit level was hit and price kept going down. Now, a tip that I can give you is if the fair value gap is big like that, you can go to the rectangle and choose the middle line, and always look for these setups on the middle line, because what can happen sometimes is price can induce you into selling earlier, but once you are taking your entry or looking for market structure shift off of 50%, that would be a guaranteed confirmed setup. All right, so keep that in mind. Now let's move on to another setup. All right, guys, so here's the last example. So I marked out the IRL, and you can see that I have also marked out the middle line of the fair value gap. This is my ERL, so this is going to be my high time frame target. Now, if I go to the 1 hour time frame, you can see that we got a shift in the market structure, right? And afterwards, what did we have? We had a higher high, and then we had this low created. So all we want is a low like this to be created, all right? And like that, you can see we had a purge over here. So that high over here is going to be my 5-minute market maker buy model target. So if I drop down to 5-minute time frame, you will see that we got market structure shift just around here. Now this entire auto block is too big, and when that is the case, you want to take your entry from the 50% of that auto block. So after the market structure shift, this was my entry. Stop goes right below the slow, and we target this original consolidation or market maker model. So that would have given you 2.29. Very mechanical, and literally this is your bread and butter. Now it's going to take you some time to get used to finding these setups, but once you do that, you're going to get really good at trading, guys. Trust me, this is I have so many videos on my YouTube, but I believe the ERL and IRL method is one of the best ones. All right, so you got to practice them as much as you can. That would be it, guys. Thank you so much for watching, and see you guys in the next one.